Gold cannot go bankrupt. Silver cannot go bankrupt, but every currency on the planet can and probably will go bankrupt in some fashion, whether it be through non-payment or outright overprinting, because the debts that are too large to pay now will have to be paid, and there's not enough dollars, there's not enough euros, et cetera, out there, so they're going to have to print more. So there's going to be defaults all over the place, and the only two monies that cannot default are gold and silver.
During economic downfalls or periods of market volatility, precious metals can serve as a safe harbor due to their intrinsic value and universal acceptance as forms of wealth. Unlike fiat currencies, gold and silver cannot be devalued by actions such as excessive monetary printing. Bill Holter believes that while gold and silver cannot go bankrupt, every fiat currency on the planet is susceptible to and likely to experience some form of bankruptcy, either through non-payment or excessive printing, due to the enormity of the debts that must be serviced. The renowned analyst sees silver in particular as more speculative than gold because of its higher volatility, with rapid price increases and decreases. Silver tends to be more volatile than gold, which means silver prices tend to move more in percentage terms when compared to gold. This suits certain investors who wish to diversify their portfolios with a more adventurous precious metal. While discussing the gold to silver ratio, Holter emphasizes that it's currently around 80-1, while the natural ratio of gold to silver in the Earth's crust is closer to 10-1. This discrepancy suggests that silver is undervalued compared to gold, and Holter believes silver should outperform gold significantly in the future. Regarding the potential for defaults on the COMEX, a major commodities exchange, Holter acknowledges that some may argue that a failure to deliver metal can be masked by offering monetary compensation. However, he stresses that, regardless of legal terminology, such situations constitute defaults if physical metal isn't provided as promised. Such defaults would drive individuals to hoard gold and silver, as they would view these metals as more valuable than the depreciating fiat currencies offered as compensation. We will now bring you clips from Bill Holter's interview with Palisades Gold Radio. But before we do, if you want more videos like this, hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
Silver is more, if you want to use the word speculative, than gold, simply because it's more volatile. It goes up faster and it goes down faster. Silver is the metal of the common man, and gold is the metal of kings, if you will. The reason you own gold is to get your serious wealth from here to the next system, whatever it's going to look like, intact, and you'd still have capital. Silver, you would use silver along the way for barter, but with the current ratio at 80-1, in other words, it takes 80 ounces of silver to buy 1 ounce of gold, it comes out of the ground at 10-1. So God's ratio is 10-1, man's ratio is 80-1. One of the two is wrong, and I think figure out which one's incorrect. So what I'm telling you is, based on the ratio, silver should way outperform gold going into the next system. The only problem with silver is if you're talking about large amounts of money, you've got a storage problem. Whereas, I mean, you literally could put 500 ounces of gold into a computer bag, weigh, I don't know, 35, 40 pounds or whatever it is. And you're walking around with $1 million, in current dollars. So, there's a portability problem with silver. There's a storage problem with silver, but it is very undervalued to gold. It should outperform gold drastically. Well, yeah, I mean, all fiat currencies are debasing. I mean, just go back 20 years ago. You were looking at gold at what, $300 an ounce, and silver at $4 or $5 an ounce. So as currencies have debased, that ounce of gold is still the same ounce of gold, and an ounce of silver is still the same ounce of silver, but it takes more dollars because they've been debasing the currency. So yeah, I mean, as the dollar debases and everything from, a cup of coffee to an ounce of gold becomes more expensive in dollars or yen or euros or British pounds or whatever you're looking at, the best way to protect your purchasing power is with gold and silver.
So You know,
And Tom, one other thing I just want to mention. I mean, the reason you're looking at it from a debasement standpoint, I think it's better right now because of what we have right in front of us to look at gold and silver from a uh, from a liability standpoint. They have no liabilities. Gold cannot go bankrupt. Silver cannot go bankrupt. But every currency on the planet can and probably will go bankrupt uh, in some fashion. I do think that the moment of revaluing gold higher is directly in front of us. Whether uh, whether that happens because there's a failure to deliver, or whether that happens because China and Russia decide they want to revalue gold higher, I don't know what the event will be, but gold and thus also silver is going to be revalued higher. I mean, they've both been artificially depressed for years, and that suppression scheme is coming to an end. And I've said for many years that whether a default on COMEX causes the revaluation or whether a revaluation causes a default on COMEX, it doesn't matter. There's going to be a failure to deliver at some point. Right. There is writing, and of course the trolls will come out and say, oh, COMEX can never default because they can just pay money. Okay, so legally it's not a default, but if somebody demands their gold and they don't get gold, I don't care what you call it. You could call it any word or concept in the world. It's a default. If they don't deliver metal, and they deliver dollars or rice or whatever, it doesn't matter. That's a default. What that's going to do is it will drive gold and silver that people have in hand into hiding, because what COMEX would then be saying is that the dollars themselves are worth less than the gold or the silver that was supposed to be delivered.
According to Bill Holter, China holds over 25,000 metric tons of gold, starkly contrasting the United States' claim of having 8,300 tons. He criticizes the U.S. for not auditing its gold reserves since 1956, dismissing their excuse that it's too expensive as bogus. Even if the U.S. possessed 8,300 tons of gold, revaluing it in the face of its massive debt would necessitate a shockingly high gold price, potentially reaching $200,000 per ounce. Holter suggests that the U.S. might have to nationalize its gold mines to back such a revaluation. Regarding the possibility of a debt default, Holter didn't foresee non-payment, but instead emphasized that the U.S. would resort to printing money to meet its obligations, potentially leading to the dollar's destruction due to its unmanageable debt load. The U.S. Federal Reserve's money printing policy has led to the devaluation of the U.S. dollar. As a result, other countries have been forced to bear the consequences of this policy. The devaluation of the U.S. dollar has led to a rise in inflation and has made imports from other countries more expensive. Let's get back to interview.
Even 3-4 years ago, I could have shown you on the back of a napkin that China has over 25,000 metric tons. And that's in comparison to the supposedly 8,300 tons that the U.S. claims to have. The U.S. has not audited their gold since, I think, 1956. And you've got to ask, well, why have they not audited? Their excuse is it's too expensive to perform an audit, which is complete horse shit. I mean, they spend, billions of dollars on trying to figure out the sexes of toads or something stupid like that. So for them to not want to spend 20 million or 40 million or whatever it costs to do the audit, it's a bogus reason. And the real reason is the 8,300 tons of gold is not there. Even if the U.S. did have 8,300 tons, and I did this calculation, I think 3 years ago, if the U.S. revalued the 8,300 tons versus, I think when I did the math, it was a 23 trillion or 25 trillion in debt that the U.S. had, you had to come up with $125,000 an ounce. So now at this number of 32 trillion, you got to be pushing $200,000 an ounce. So it would be a ridiculously high number, but a valid number. My opinion is, yeah, the U.S. can revalue gold, But what they'd have to do in that instance is they would have to nationalize the gold mines because that's where the gold is. It's in the ground, has not been mined yet. Don't think that there will be a debt default. Well, let me rephrase that. There's going to be a debt default, but it won't be for non-payment. They will just print whatever they need to print. And, if overnight they have to triple the money supply or quadruple whatever the number is in order to create enough dollars to make payments, they're going to do whatever they have to do. They will destroy the dollar in the process of paying the debt off. And because the debt in current terms is unpayable, it's too large. And I mean, just look at oil. I mean, the petrodollar is dead. The petrodollar was created in 1973 when Saudi Arabia said that they would only take dollars for oil. Well, that's changed over the last couple of years. Saudi Arabia will now accept yuan. I believe they'll accept euros. They're not exclusively dollars. And a lot of these countries that had to buy dollars in the past in order to purchase oil no longer have to purchase dollars. And then that brings into question, what about the dollar reserves that they've built up? Do they want to hold those dollar reserves for future oil payments, or do they want to sell the dollar reserves and buy euros or buy yuan or what have you in order to make payment for oil? And I think that may be why velocity looks like it's turning higher, because you've got foreign sovereigns that are liquidating dollars because they don't see that they're going to be forced to own dollars in order to purchase oil.
Interesting. Yeah. So it's not just at a consumer level, it's also at a sovereign currency trading and energy trading level.
Well, yeah, most importantly, it is the sovereigns. I mean, yes, it's important, individuals, corporations, etc. But the big money is done, through sovereign trade, through trade. And if you go back 20 years ago, you probably had 70, 80% or more of global commodity contracts priced in dollars, and that's no longer the case.
As global economic uncertainties persist, precious metals like gold and silver are poised to play a pivotal role in safeguarding wealth. Silver, with its higher volatility, may emerge as an attractive option for investors seeking to diversify their portfolios. What are your thoughts on considering precious metals as a hedge against economic uncertainty? Please share your thoughts in the comments section below. If you found this video informative, remember to give it a thumbs up, subscribe to our channel, and enable notifications to stay informed about our latest videos on silver, gold, and copper. Thank you for watching, and we appreciate your support.